In the 1600s, the Dutch East India Company employed hundreds of ships to trade gold spices, porcelain, and silks across the globe. But managing this enormous business wasn't cheap. To fund their expensive travels, the firm turned their attention to individuals who could put up money to help fund the trip for a percentage of the profits from the ship. This enabled the company to pay for larger cruises and increase the profits of both themselves and their smart investors. The company sold these shares through cafes and shipping ports across the globe. The Dutch East India Company unknowingly created the premier stock market. Since then, businesses have been accumulating funds from investors who are willing to help every kind of business. And now, the stock market is home to colleges, careers, as well as entire television channels dedicated to studying the market. However, today's market is a lot more complex than its earlier form of operation. What are the ways that investors and companies make use of the market today? Let's consider a food business that decides to go on the market. The company first needs to announce itself to investors with large sums of money. If they think that the company is an excellent idea, they are the first to have a shot at investing and later take over the company's initial public offering, also known as an IPO. The company is then placed on the market for public sale, and any individual who believes the company is profitable could purchase the stock. The purchase of stocks makes investors an owner of the business. Their investments help the business to grow, and when it grows, and more investors be interested in purchasing stocks. As the demand for these stocks grows, so too will their cost, making it more expensive for prospective buyers, as well as increasing the value of the company's stock for those who already own. The company benefits from this increase in interest, can help finance new initiatives, and increases its overall market value by demonstrating the number of people who would be willing to put money into their ideas. But if for any reason, a company begins to look less profitable, it could also be the reverse. If investors believe that the value of their stocks is going to fall, they'll try to sell their stock in hope of earning profits before the business decreases its value. If stocks are sold, and the demand for stocks decreases as the price drops, the stock price also drops, and that's also the value of the company's stock. Investors could suffer massive losses until the company begins to show signs of profitability. The whirlwind of demand and supply is affected by a variety of elements. Businesses are constantly under the impact of market forces, including the fluctuating prices of materials, shifts in production technology, as well as the changing costs of labor. Investors might be concerned about leadership changes, negative publicity, or bigger issues like new laws or trade policies, or even new laws in trade. Of course, a lot of investors are merely willing to sell their valuable stocks to satisfy personal desires. These factors create day-to-day noise in the market that can cause companies to appear to be more and less effective. In the case of the stock market, the appearance of losing value can lead to the loss of investors and ultimately losing the actual value. Market confidence has the potential to create anything from economic booms to financial crises. This difficult-to-track variable is one reason why experts recommend long-term, reliable investments over the desire to earn cash in a hurry. But experts are always creating tools to improve their chances for success within this unstable system. The stock market is not only for the powerful and wealthy. Since the advent of the internet, ordinary investors can invest in stocks in the same ways as an investor of the size of a fortune would. As more people are educated on this complicated system, they can also invest in stocks, help the companies they trust, and work towards their financial targets. It starts with getting involved. Investors today make use of the stock market in various ways. Some are long-term investors, who hold onto their stocks for a significant amount of time, while others are day traders who buy and sell stocks in a short amount of time to earn quick profits. Companies also make use of the market to raise capital, and they can do so through different ways, such as issuing bonds or offering stocks. In addition to the traditional stock market, there are also newer forms of investment, such as exchange-traded funds, ETFs, and cryptocurrencies. ETFs are investment funds that hold a basket of stocks and trade like a stock on an exchange. They offer investors the ability to diversify their portfolio with a single investment. Cryptocurrencies are digital assets that operate independently of central banks and can be traded on various exchanges. Investors today also have access to a wide range of tools and resources that help them make informed decisions about which stocks to invest in. These tools include financial news and analysis websites, investment apps, and brokerage firms that provide investment advice and research reports. Despite the complexity of the stock market, it remains a crucial part of the global economy, facilitating investment and capital formation for businesses across various industries. As such, it is essential for investors to educate themselves on the workings of the market and the risks and rewards associated with investing. It is also important to note that investing in the stock market involves risks, and there are no guarantees of profits or returns. The market can be influenced by a wide range of factors, including economic conditions, political events, and global trends, which can lead to fluctuations in stock prices and the overall performance of the market. As such, investors must be prepared to weather market volatility and be patient with their investments. Additionally, it is crucial for investors to practice diversification by investing in a variety of stocks or other assets, which can help to mitigate risk and potentially maximize returns over time. By spreading their investments across different industries and asset classes, investors can reduce the impact of any single investment on their portfolio's overall performance. Finally, investors should also be mindful of their emotions when making investment decisions. It is common for investors to get caught up in market hype or to panic during market downturns, which can lead to poor investment decisions. By maintaining a long-term perspective and sticking to a well-thought-out investment plan, investors can increase their chances of success in the stock market. Overall, the stock market is a dynamic and ever-changing environment that requires ongoing education and diligence to navigate successfully. While it may seem overwhelming at first, investors who take the time to learn about the market and practice sound investment principles can potentially reap significant rewards over the long term. And in review, the stock market has evolved significantly since its inception in the 1600s, becoming an integral part of the modern global economy. Investors and companies use the market in various ways to raise capital, diversify portfolios, and earn profits. While the market can be complex and volatile, it offers opportunities for both long-term and short-term investments. By educating themselves and utilizing the tools and resources available, investors can make informed decisions that help them work towards their financial goals. So, whether you're a seasoned investor or just starting, the stock market offers a world of possibilities to explore. And that's it for today's video on the stock market. We hope that you found this information helpful in understanding how investors and companies make use of the market today. Remember, the stock market is a complex system, but with the right knowledge and resources, anyone can become a successful investor. So, take some time to explore the world of investing and find the strategies that work best for you. As always, thanks for tuning in, and please leave any comments or questions you may have in the comments section below. Don't forget to like and subscribe to our channel for more informative videos on the latest trends in technology and finance.